Good afternoon and welcome to the show. It is 12:05. You with Matthew on Speak Your Mind. Now, I'm filling in for Louise at the moment because she's on leave, but with me in studio, I have the FNPF CEO, Mr. Chochi Kuroi, and also the General Manager, Member Services, Mr. Alipate Wangarawai. Good afternoon, and I'm glad that you could both make it to the show. Now, I know there has been a lot of things going on right now with the FNPF, given the amount of phases that you've released. And for one thing that I just want to touch on, given that most members who know that the portion of their income, of course, is paid to FNPF accounts, now they tend to think that they should be able to access it whenever they want. Now, can you start just explaining a bit why FNPF was established?
Thank you, Matthew. Again, thank you again for the opportunity to be here with you. As we celebrate our 50th anniversary of independence, the Fiji National Provident Fund has been in existence a bit longer than 50 years. It's actually about 54 years. It was set up in 1966. And the main purpose was to make sure that workers, members, can have a platform to save for their retirement. So that was the initial intent, and it's still the intent now, that members can put aside some of their income or their wages and salaries to make sure that when they retire, there's a pool of funds that they can rely on.
All right, and so how has FNPF been able to ensure that it keeps its core role in retirement saving fund?
I think over the years, as you know, Matthew, in early 2010, 2012, we undertook a major reform with the fund.
Yeah.
And one of the key focus was to repurpose the fund back to its core purpose. In that reform, we changed members' accounts into two. Members now have two accounts. One is a preserved account, which is 70% of our contributions and our interest, and the other is 30%. So the 70% is preserved for retirement. That is a major change that wasn't there before. So only 30% we can access for our pre-retirement withdrawals, including the COVID assistance that we are using now.
And before you created that new reform, what were members' accounts usually like?
It was much lower. If you can see in 2014, when we made this change, the total in the preserve accounts was only about 2.1 billion.
Yeah.
In the last 6 years, that has grown to more than double. So that is the power of the preservation. Remember, in 2014, that means we have been in existence for more than around 50 years. 48 years before that, members only have the balances of about 2.1 billion in their preserve. But in the last 6 years, that has more than doubled.
So between the 70 and 30%, obviously the 30% is the one they can access, but that's under certain conditions like for medical reasons or education. Am I right?
Yeah. Matthew, just to probably clarify it further, prior to the reforms, members could come to the FNPF and access 2/3 of their monies. So only 1/3 was preserved for retirement. And then not only that, there were 23 grounds of withdrawals. So if you look at it, it was not in line with what was the purpose that the fund was established for. So when we did the reforms in 2012, we changed that now, as the Chief was alluding to. So it's now the bulk of your monies is now preserved for your retirement. And instead of the 23 grounds of withdrawal, we've shut that pipe. We've now only are confined to 5 grounds of withdrawals, which is education, housing, medical, funeral, and unemployment. Those are the only 5 approved grounds of withdrawals, as opposed to the 23 grounds, which was just...
and out of those 3 that you highlighted, how many members, which one do they usually go for when they access the 30%?
All the assistance that I'm talking about is only confined to your 30%. So the bulk of your 70% is not touched. The only time that you're allowed to touch it is when you are building a home or land for the first time. Then we allow you to access 30% into your 70%, which equates to 21%. So 21% plus the 30% your general account is the 51%, which shows on your housing eligibility when you come to the fund to ask for any housing assistance.
But just go back, like between that 30%, you said with the funerals and medical, they could access that. What's one of the common things that you've noticed people accessing the 30% for? Has it been either for medical or within funerals for families?
It's normally funeral, education,
Are the main two?
unemployment, education is, and then housing also. So these are the five grounds of withdrawals. So you are only confined to you. So that requires a planning too on the members' part.
One thing I've also heard that was highlighted was the definition contribution fund, and what is that often described as?
Defined contribution fund means that you get what you put in, and that's what you take when you reach your retirement age. The other funds are normally called defined benefit funds.
Okay.
Defined benefit funds defines to you like the benefits that you will get at the end of the day. But defined contribution is whatever you put in, you add your interest. At the end of your retirement, that is what we give you. Yeah.
And what are exactly some of the benefits that the members could get?
When you retire, there are various options.
Yeah.
One, you can buy a pension product. Pension gives you annuity, like a monthly amount that you can get while you continue to live. It's a life pension product. You can join that with your spouse, or you can either take part lump sum, you can take full withdrawals. So these are the options that are available to members when they reach their entitlement age, which is 55.
Yeah, I mean, one thing is for sure is that given the fact that, we've been going through a lot, especially with COVID-19, and one thing that I want to highlight, and I'm hoping to highlight in our next segment, is what it's been like on social media. But we'll be back right after the break. It's 12 past 12. You are on the Speak Your Mind with Matthew. And with me, I have the CEO of FNPF, Mr. Chauchi Kuroi, and General Manager, Member of Services, Mr. Alipate Wangarewai. Now, like I said, social media has been quite prevalent in terms of people saying, you know what, that's our money. We get to do whatever we want with our money. And, with everything that has been going on with COVID-19, you've been coming up with some really good solutions in terms of the phases that you've laid out. What has this response been like with that?
Thank you, Matthew. As you know, FNPF, to a great extent, is a social security institution. It provides benefits when members go through difficult times. For instance, as my colleague Alipate has explained, we go through phases in our life while we're still working that we may need a house, we may need to educate ourselves. So that is provided for in our design, where members can access the 30% for those needs. May end up in the hospital where you need some medical treatment, so you can access those funds. But 70% is preserved when we reach retirement, because whether we like it or not, we will retire one day.
Yeah.
And when we retire, the comforts of having our monthly or daily or weekly wages and salary will not be there. So that's the sole purpose of the 70% to preserve. I know under the pandemic we're going through a difficult time. It's unprecedented. We never planned for it. So we're allowing members to access 30% as part of the unemployment benefits. The fund is administered by the law, by the FNPF Act, and that is allowed under the Act. As I said earlier, the purpose of the fund is social security.
Yeah.
It's designed to allow members to access those benefits when they go through those difficult times. And this pandemic has actually displaced a lot of our workers out of their workplaces. A lot of our workers still hasn't got the avenue to find themselves work. So they're still unemployed. So how can we assist these members? And definitely it's allowed under the law, and we're thankful for government to coming up with this assistance to allow members who have exhausted their GA to top up from government. That is the principle of solidarity where the FNPF is set up on. It relies on employers, key stakeholders, members, government, and employers.
So when you say they've exhausted their funds, like how much are you saying? Is there like only like $100 left in there, or nothing at all? Complete exhaustion of the funds?
No, when I say exhausting their general account, they're 30%.
30%.
Yeah, right up till now, about 14,700 of the 50,000 members that we are currently assessing under the phase 2 and phase 3 have basically exhausted their general account. But these members collectively still have a preserve account of about $112 million. So there's a big confusion out there that members, that is the power of preservation. I explained that earlier.
Yeah.
So they only exhaust 30% of their funds. They still have 113 million that's sitting in the preserve, which we are not allowing them to touch, and government is coming in to top up to still allow members to still benefit from those assistances.
So all this misconception online and everything that's been said by different unions, that's just all basically, I mean, worrying and complaining when you have a really strong plan in place.
And yes, and that's what we have been discussing with government. We're saying this 70% should not be touched because this is the only protection that we have for our members. And we really appreciate the foresight and the assistance from government to only top up those that have exhausted those GA.
And like, okay, for the members that are listening in right now, what words of assurance can you give them so they understand that, you know, I mean, clearly your explanation was on point in explaining that the 70% is preserved, and that what they were doing was, you know, you basically using the 30%, and how you have basically had all the proper steps in place to make sure that everyone understands that their FNPF is safe. Now, what are other ways that you have been trying to go online in making sure, probably social media, in ensuring the public and your members that their accounts are not just safe, but protected for the future?
I'll probably just start it off, and the chief can, in terms of what are some of the checks and balances that is there to reassure members of the safety of their funds. First and foremost, we've got our own, in terms of the law, the FNPF is required to meet solvency ratios. Solvency ratios in terms of making sure that the fund is solvent for the long term, to ensure. That's mandated by law. In fact, they allow us to keep 10% above, any liability. But for us, for our prudent internal protection program, we hold about $1.25 for each liability there is. So there's more than enough assets to cover for any liability. So the solvency, which is mandated by law, is one of the requirements to ensure that the fund is solvent. And the second thing that ensures that solvency check is done, secondly, it has to be certified by an actuary. The actuary will have to issue a report every year. That's one of the highest levels of check to ensure that we've got the assets, they project liabilities, that we've got the assets to cover those liabilities going into the future. So that's another protection. That's one of the highest forms of protection. So in fact, before we credit an interest, which we declare every year, the actuary will have to certify that the fund is in a solvent position that will enable us to pay that interest without putting undue stress on the solvency of the fund, which is its ability to pay. So that's the second one. Not only that, then there's the RBF, which is our regulator, the prudent regulator. Before we even pay for the interest, we'll have, at the end of the day, the RBF will then have to say, okay, you can declare and pay that interest because you've got the ability to pay that. And not only that, we've now, in terms of the reforms that we were alluding to, we've separated the funds. There are now 3 separate funds. So there's different funds on the FNPF fund, which is for us that haven't retired. Those that have retired, they've got the retirement income fund, separate asset to pay for their liabilities and pension. And also there's a separate special death benefit. These are all good and transparent mechanisms to ensure that that we are fully transparent in terms of the performance of each fund. So these are some of the balances that the checks and balances that are inbuilt into our system. And of course, not to mention the external auditor. We've just signed off our auditor, and before the external auditor comes in also, they will have to come in and investigate our books to ensure that it's in accordance. So these are all checks and balances that we have to reassure members of the safety of their funds.
I thank you for that, Mr. Mr. Wangarewai, and we'll come back again after the break. Please stay listening in. Well, we're back again. It is 20 past 12, and just going back to what we spoke about, one of the things that I was truly interested in was how you have made your digital platforms more attractive to your members and how to motivate them to use them online. Now, what has that been like, especially for those living overseas?
Thank you, Matthew. I think before I go to the digital question, your earlier question on how do we assure a member, let's say a member is 30 years now, maybe working in the tourism industry, has lost his job, how can he be assured that his funds will be there when he reaches 55? Of course, he may have or may not have balances in the GA, but from our perspective, the assistance that we are giving is within the law. And for him, he needs to be assured that whatever he's getting is coming from his GA. If he's exhausted his GA, then the government is topping that up. And his preserved account is still preserved for them during retirement. So hopefully after this pandemic, because pandemic is maybe here for a certain period, he will have the opportunity to continue to rebuild his balance and still look forward to a good future. In terms of your question on digital, a few years back when we started in part of our strategic plan, going digital was part of our strategy. So we changed our IT system, and we are fortunate that our system is at a maturity level that when this thing happens. As I mentioned to you earlier, the demand by our members in the last few months is 4 times what we normally receive in a year. So obviously we cannot process this request manually. And we relied a lot on our digital platform, and we thank our team, digital team, for adapting and changing as and when requirements change. As you know, under this environment, things keep on changing. We design a product today, we have to announce it, formulate it, and roll it out next week. So we require a team that is agile and adaptive to make sure that we meet the expectations of our members. I know there's still a lot of people who come to us for complaints and so on, but I think in generally, we are meeting more than sufficient requirements for our members.
Which begs the question, with you saying that a lot of people are coming with complaints, what has it been like for your staff? How have they been coping with the amount of complaints and things that have coming in? I mean, have they been getting...
I think we are fortunate. We have a very good team. We went through a period of reform. A lot of our people have gone through gone through the mill in terms of facing up to the members, frustrated members. So we take our hats off to our workers. They have responded well. We have to, at some point, move everybody to do something. Today we'll be doing this. Tomorrow we'll be doing certain things. We have put teams from all the areas of the fund to address complaints. So it's quite a agile team at the moment, but hopefully they continue to work as members demand of us.
And with that, like in terms, you've spoken a lot about the investment as well that FNPF has. how can you reassure the people that the investments that FNPF is currently or currently has is sustainable for the future?
Yeah, I think we been asked a lot of questions because currently our total asset is about $7.8 billion. That's $7.8 billion. These assets are held in various types of investments. We have majority, about 43% is in government bonds. Government bonds is the most safe investment for us.
How so?
In a year, we receive about $300 million worth of interest from our investment in government bonds. Then we have other investments in the communication sector, banks and deposits, other equities, various companies that we own shares in. Our investment in hotels is only about 12%. We are more diversified than the economy. The economy, about 40% of the economy is tourism. When it comes to FNPF, the portfolio is only 12%.
And that's a common misconception right there. A lot of people think that majority of FNPF investments is in the hotel industry. And why do you think that is?
I think it's maybe because that's the sector that's mostly affected. And people, because we own, members own significant assets like GPH, for instance.
Yeah.
And we can all see that. Holiday Inn, we have Intercontinental, we have Momi, we have Sheraton West End and Sheraton Denner House. These are premium assets. And along these assets sits a lot of residential opportunities. And these are long-term investments. So the pandemic effect will be a short-term. So we can't just go and sell the assets now because we still have sufficient cash to push through during this time. We still have today about 570 million of cash and deposits in the banks. So it is still a lot of assets to meet members' liabilities now and more importantly into the future.
Now, there's a term that I became familiar with a couple of days ago, and it's basically the solvency requirement means. What does that? Could you explain more on that, please?
Yeah, solvency, I explained earlier, as a member, how can I be assured that when I reach 55, I have my funds there with me? And the solvency is there as a very basic measure. One way to explain it is, if we sell all our assets today, will we have enough to cater for our liabilities? Liabilities for the fund basically is all the balances that we have. Your balance, my balance, about 441,000 members, their total balance is only about $6.1 billion. The asset is $7.8 billion. So there's 1.3 billion even now. But that's now. How do we ensure that that value is maintained into the future? Alipati has explained some of the mechanism
that you have in place.
Yeah, that's in place to make sure that those protections are there for the members.
And thank you for that, Mr. Koroi. We'll be back right after the break. Stay with us. Thank you for that. And we're back on the show again. You with Matthew on Speak Your Mind. And with me in studio, I have the CEO for FNPF, Mr. Chauchi Koroi. And I also have the General Manager for Members and Services, Mr. Alipate Wangariwai. Now, one of the things that we want to do is we're opening up the lines also to those who wish to call in and ask questions. If you'd like to know more about your account, remember you can call us 3220-906 or 3220-907. If you'd like to ask questions concerning your FNPF account, if you'd like to know more, they'd be more than happy to take your calls in. But going back to what we had spoken about, now, one of the things that really came to light was the the phases that you now? I bet some questions that have been coming up as well is that will there be a phase 4?
I think we're working closely with the government, and also we've received a lot of calls from industry leaders, particularly in the tourism sector, and we are mindful of what's happening in the labor market. Still, a lot of hotels are running at very low occupancies. A lot of your locals might fill up during the weekends, but these employers cannot take them back for the whole period. So I think in that regard, we're discussing with government, and we'll be making an announcement shortly on these phases.
What about voluntary members? Have they been able to access any of the COVID-19 relief?
At the moment, they haven't. But it's also some of the areas that we want to address in the upcoming release, when we are ready with all the details.
Now, what are some of the challenges that you have encountered during the withdrawals, especially between the phases?
Some of the problems that we have encountered is, it's about wrong account numbers being put in, wrong forms being filled. Now, this is when you run a project of this magnitude. These are the kind of teething problems that you expect.
Yeah.
But we've got our internal back-end people that are ready to sort of look at that. And I also take this opportunity, Matthew, to sort of to say to members that those that have had difficulties, those that have the expectations may have not been in line. They may have had some difficulties. We would like them to come forward and tell us what was the problems that they encountered. And we take this opportunity to also apologize if the expectations of our services, given the magnitude of the services, the number of applications that we are receiving, they are bound to certain things that we'll overlook.
I mean, that's a big undertaking with the amount of people that applied, even at different phases as well. But apart from the challenges, what were some? I mean, because I know I've been talking to a lot of people about this, trying to engage how they were able to access the phases, whether they faced any difficulties. And for one particular member, she told me about her aunt who had gotten the call that, okay, it should be in your accounts the next following week, but she still couldn't, she still wasn't receiving anything. So what would be your advice to her for someone going through a similar situation that's listening in right now?
Yeah. For those, we would ask them to get in touch with us. We've got our people that are on standby to look at those kind of situations where members have been having difficulties. But members must be mindful also that there are certain cycles that there are certain cycles and installment dates that we have advertised, which is following that payment cycles. But otherwise, if members are having genuine difficulty, please do come forward. Come to any of our offices, our staff, or give us a call or send us an email, and then we will make sure that that they're. And I think the thing that we tell our staff, one of the things that we're impressing on us, to put yourself in members' shoes at this point in time.
Yeah.
So for us, we've told our staff to be understanding, because at the end of the day, it's about the problems that members are facing are quite. Some of them are in quite difficult situations. So for our staff, need to rise to the mark to ensure that they are compassionate, they empathize, and we do whatever we can do in a very polite and respectful manner to resolve their issues very quickly so that they can get their monies.
And as someone who has accessed your services, I have to say your staff are well-mannered and are very kind and on point. One thing that I do want to know, though, is could you give an estimate of roughly how many people a day would come in with complaints in terms of them not being able to access the phase, the money from the phase that they were supposed to receive?
We track the complaints. There's a complaints management system that we have. I think last month I just saw the report. There was about close to 400 complaints that we received. That's over the month.
Yeah. That's quite a small number if you think about the amount of members that exist
Yeah.
in the FNPF.
We discuss as a percentage is very small,
Yeah.
but we keep
Very
on
small.
emphasizing to our people, these are 400 members.
Yes.
Forget about the stats. The percentage may look small, but remember these are 400 members who their family may be relying on this assistance.
That's just so true.
So we really need to still focus on them.
And I appreciate that that love and human approach that you and your staff have towards its members. Now, with a lot of the members exhausting their general account and the balance in COVID-19, what can they do, or what will FNPF do to help them build their savings again?
I think right now we are going through this pandemic. I think it's how we weather the storm this period. It might be 1 year, it might be 2 years. So we're looking forward to a period post COVID to come up with measures that can help members regain the balances they have lost over the years.
And I would like to touch on that just a little bit, but right after the break, we'll be back again with more. Welcome back. It is 24 minutes to 1 p.m. And also we will be continuing our, a talk on something that's very important that everyone is facing right now. But with the National Provident Fund in studio with me, I have the CEO and also the General Manager of Services, Mr. Alipate Wangarawai. Now, we spoke about the relief efforts. And I mean, what do you have in place in terms of those members who have exhausted their general account? Now, do you have any sort of other programs that you run that could help assist them, like financial literacy programs, or how to invest certain money in certain places?
Yeah, that's a very good question. In fact, one of the functions that is in the Act for the FNPF to do is to educate our members in terms of their financial literacy and all of that. That's a very important arm that's a lot of people don't realize this. We've started this way back. We've got a team that actually goes out to advocate and educate our members, and they visit workplaces and advising members on how to save. And we've got a product that's actually there that members can voluntarily increase their additional contributions to the fund if they want to.
How do they go about that? What is involved in that?
We know that civil servants, they don't have a pay cut at all in some statutory bodies, so we've been advocating to them to say the best way to save is just to increase or additionally contribute your contributions to the fund. By law, from the 1st of April, 5% is from the government in terms of from your employer, and 5% is from you as the member. But then by law, the ceiling is actually 30%. You have an additional 20% if you can or if you want to increase your additional contributions by. So that is as simple as filling in a form which is called an additional contribution form. You get it signed off with your pay clerk. You decide how much you want to do. The advice we give people is that choose an amount that's light on you, that doesn't cause you any problems. You know when the money gets to our pocket, that's it. So you might as well keep it at FNPF so that once it reaches, all of us know where the ATMs are.
Yeah.
So we might as well keep it in the FNPF because there are stringent rules governing the withdrawal. And this is what we're encouraging workers, those that haven't had a pay card or anything. The best way to save we are promoting is just to increase your additional contributions by filling in your additional contribution, direct deductions from your salary to FNPF to see, and you will see the power of compound interest. And the MEA team, the advocacy team, we've actually got a retirement calculator tool that actually tells you how much you can save if you additionally save. So this is also available. You can go to any of our branches or offices, and we will get people to come and show you how much you can accumulate now when you're 55 if you choose to save aside $5, $10, $20 or additional 1%, 2%. And I would, those that are listening now, I would encourage you to come and try that out for yourselves or see one of our staff.
And I'd also encourage you to call our number on 3220-906 and 907 if you'd like to talk to, Mr. Chao Chikuroy, FNPF CEO, and find out more on, any questions at all that you've been thinking about in relations to the phases that were released. But also, one thing I was interested to know about was the different stakeholders that you work with in terms of helping them in not just with their investment, but how to use their money wisely. Who else does FNPF partner with?
We are actually part of a financial literacy working group,
Yeah.
which works under the auspices of the Reserve Bank of Fiji, where we engage with all stakeholders, and we have actually done expos and for example, in the fund, we've driven retirement expos. We're wanting to do another one next shortly, whereby where people come in to sort of access this counseling. And as you said, the stakeholders that are important to us are actually employers. When we're doing this, they are a very key part of these employers, because some of the forms have to be filled in by the employers. For example, the COVID and the additional contributions, they're very critical to us. And likewise, the government of the day that supports us.
And given that everyone is venturing into farming because it's kind of the thing, has FNPF partnered up with the Ministry of Agriculture in terms of allowing their members to know that there are other avenues that they could invest in or maybe use?
That's a good question. In fact, we have done some in terms of going into farming. In fact, we have reached out to the Fiji Development Bank with the Fiji Sugar Corporation. Now we with reaching out with the Agricultural Marketing Authority, signing up farmers for them to also become members of the. And I would encourage farmers. We've got a product which is called a voluntary product. The FNPF is not only confined to us that are in the formal sector.
Yeah.
One thing that I want to let people know today, it also caters for the informal sector. If you can become a voluntary member from as young as 6 years, which is a 6-year-old, or from 18 to 54 years old. And it simply means coming in, joining a farm, so that you can also share in the benefit. For example, if you are a farmer, up to a certain stage, you will not get the strength to carry on farming. So you can accumulate your funds there. When you retire, you also get a pension. You're still in the village, but then you also get in the benefits that other people that have entered the workforce also enjoy.
And what has it been like? Clearly you would have had those those farmers, because I know of a lot of young farmers who are 24, 27, and they're making quite a good career as a farmer, especially with the amount of yangwana or ndalo that they're producing. So what has it been like then with your outreach to the community?
Our team has just come back from Ngau. As we spoke, they were there for last week in Koro, Koro Island, talking with our, and I would just like to take this opportunity for those people in Koro Island listening to thank them for the hospitality that they gave to our team that actually went to Koro. Very successful. Some members have now signed in additional contributions, and they've also registered as voluntary members. And we see this as a big thing for us in the future, because the members in our informal areas, in our rural areas, in our islands, maritime islands, they can also share in the benefits. And this is something that we're actually actively promoting together with stakeholders like the AMA, Fiji Development Bank, and the Ministry of Itoke Affairs through their ROCO, through the ROCOs.
And clearly, is like you said, it's open to anyone who anyone who has a little business running that they could put in investment themselves. And has it been like a really good response from those that you within probably, I don't know, the urban areas?
Yeah, I think the opportunity was always there.
Yeah.
But I think on our part, maybe we haven't really advocated this much strongly. But I think a lot of members, even in the formal sector, now realize the benefit of having FNPF. The assistance that we are providing and all this opportunity to save for their future. But I think, as Patia mentioned, we have received a lot of good feedback. The rural areas, even our workers. I think I was just seeing the numbers. In the last few months, our members that put on additional contribution is increased by about 5,000 members.
That's a good number.
That's a lot of members who are now putting on additional contributions, which is a good success story for them.
Well, I want to thank you both for taking the time to come on the show. And big vinakapakalebo to the FNPF and the CEO of FNPF, that is Mr. Chau Chikaroi, and General Manager Member Services, Mr. Alipate Wangarewai. Thank you both. And that's it from us today. We hope you enjoy the show.